Good morning, good afternoon, good evening, and welcome to our 334th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. Now, the way this call works is this is an AMA, like you see on Reddit. You can ask me anything. You can ask me business questions. You can ask me investing questions, personal growth questions, startup questions, any questions you want to. My humble goal is to help you take your career, your portfolio, etc., and your happiness to the next level. So further ado, let's begin. One quick housekeeping announcement. So we just released a new product that's only available to people that have taken my programs in the past. If you got an email about this product, you can definitely sign up at a founder's rate. It's called community.harounventures.com, and there's a lot of AI embedded, and there's also ways for you to interact with our tons and tons of students all over the world. Okay, so your network is your net worth. Relationships are more important than product knowledge. In terms of AI, there's a feature called Ask Chris AI. You can ask any questions, and you can also ask me questions directly, and I'll answer by filming little videos directly for you. So we just rolled this out. Again, if you got an email about this, it means you're on the founders list, early access list. And of course, you can access all of my courses, electives, MBA program, etc., directly on this. And the great thing about it also is that there's an Android app as well as an iOS app available for it. There's also gamification with the leaderboard, many events you get access to, and then tons of guest speakers. So if you're interested in this product, just go to your email. And if you're one of my supporters, meaning you bought courses on my website in the past, you'll get an email for early access. And then the general public will be released in about a week or so. And if you have questions about it, please let me know by all means. Thanks. All right. First up, Ray. Good to see you. Ray wrote, BDO Global as the new independent auditor since October 2024 for SMCI. Isn't this a long enough period to be sure reporting is okay? Yeah, let me quickly explain that. Okay, so I never want you guys to invest in a company that's publicly traded that doesn't have a big four auditing firm, meaning accounting firm, doing the auditing. Okay, and I'll show you an example in a second. And what that means is you want to stick with Deloitte, Ernst & Young, KPMG, and PricewaterhouseCoopers. BDO is an up-and-comer. I think it's number 5 right now. Now, the problem with SMCI is that Ernst & Young resigned as their auditor last year. And the stock actually tanked because of that. It's funny you ask about this because I do a case study on this in one of my courses. So I've got an elective course that all my clients get on my website called Forensic Financial Statement Analysis Using AI. And you never want to invest in a company if it doesn't have a top 4 auditor. So when it comes to super micro SMCI, what happened was, as I mentioned earlier, their auditor resigned. And when their auditor resigned, the stock actually fell off a cliff, as you can see right here in the corner. And what the auditor does, okay, when you're doing due diligence on a company, what the auditor does is they actually bless the financial statements, right? And so there's always an audit report, usually, in the 10K, meaning the annual report. And you have to read that audit report, okay? And I teach you how to do it in my courses. And if the auditor says there's material accounting issues, don't invest. Now, there are significant accounting issues with SMCI and the stock fell off a cliff, as I showed you in the chart a second ago, because what happened was the auditor resigned. Okay, so always stick with a big 4 auditor. If you don't see a brand name auditor auditing the financial statements, don't invest. Yeah. And the audit report just goes in the 10K, not in the 10Q, meaning the quarterly reports, because the 10Qs are unaudited. All right. Next question is, which asset class is underperforming now and a good buying opportunity? I'll tell you what's underperforming now. So year to date, you can always look at the GICS classification, GICS, for the S&P 500. And some energy stocks have underperformed. Some real estate stocks have underperformed, but healthcare has really underperformed, partially because Kennedy is a wild card at this point. We don't know what he's going to do in terms of regulating healthcare companies. So you can look at that. But when you do investment research on a company, I don't want you to think short term. What I want you to do is I want you to tell yourself or ask yourself this question. In 5 years, will this company be more relevant or less relevant than it is today? Then start doing your due diligence. So how do you do due diligence? I'll show you this very quickly. So I provide you with all the templates you need to do due diligence on companies. This template here is to thoroughly understand the footnotes and accounting stuff. Okay, and you can print out a report on this after you do research on a company and bring it to your interviews. But what I prefer you to do first is to do deep due diligence on the company by analyzing the qualitative stuff, quantitative stuff, and then your financial stuff, and you build out your financial model. And so there's 100 steps here, and each step has got about 20 or 30 questions each that you're going to answer. And then once you answer those questions, you get a one-page executive summary you can print out. This is dummy data, and bring to your interviews or show your boss if you work in asset management or for picking stocks yourself. And you also print out a massive detailed report, and you get a dashboard as well. And so deciding to invest in a company is not just based on a couple of things like what is the PE, who is the management team. There's a lot more research you have to do. And the way you know you probably have a decent investment is if you actually finish that entire research report. Okay, and the way you know you don't have a good investment or idea is if you don't finish that report. So quite often for me, when I managed my hedge fund years ago, which I morphed into a venture capital firm, what I used to do was I would have hundreds of one-page write-ups like I showed you that analyze fundamentals, valuation, and technicals, hundreds of companies on my wall. And those are the hundreds of write-ups that I completed. Now, I had way more than a couple hundred write-ups I did not complete. It's kind of like a business plan. You know, failing to plan is plan to fail. And before you start a company, you always have to write a thorough business plan. And of course, I have a template for that as well. I have a template for everything. So in my premium products, and you can click on the link in the description of this video to set up a call with somebody on my team, see if you want to join. But I have a venture capital bootcamp. And you answer tons and tons of questions about your startup. And then what you do is you print out your business plan and your investor slides. And the way you know you have a great business plan is if, relatively speaking, is if you finish it. Starting a company is one of the most stressful things you can do in your life. And if you don't plan accordingly, what can happen is you can lose, obviously, all your money, your relationships, your health suffers as well. So plan accordingly. That's what I'm here for. Thanks. All right. Next question I've got here. Yeah. Any thoughts on REITs? Yeah. So REITs are down slightly for the year. REIT stands for Real Estate Investment Trust. And what that means is this. If you don't want to buy a house or an apartment, you can invest in a ticker that is a REIT, Real Estate Investment Trust. And what happens is by law, they have to pay out about 90% of their profits in terms of dividends. Don't ever invest in any stock ever because it has an insanely high dividend yield. You need to do research first because the market might be telling you that dividend is not sustainable. But if you want to invest in real estate, what I recommend that you do is you fill out a real estate business plan. So I have the complete real estate course here exclusively available on my website. And what I do is I ask you tons of questions about the property you want to buy. And I have you evaluate using 5 different valuation methodologies. Okay. And then what I do, and this works in every country, I teach you about mortgages, all the paperwork, all the financial statements, etc. And what comes out of this is a one-page executive summary on the real estate property you want to buy, as well as a business plan. It works for every single country in the world. All right, let me go to the next question here. All right. Next question is DDOG, which is Datadog, I believe. It's an enterprise software company that does cloud-based monitoring. Okay. So DDOG is facing a class action lawsuit. Yes. There's a couple, actually. One of them is with respect to patents. Another one is just for mishandling of employees. The representative action settlement will be in January. Should I wait to see the stock price changes or sell before? Yeah. So you need to do a lot of research on this. And what you can do is go directly to the 10K, meaning the annual report. And then what you're going to do is you're going to search for lawsuits. And it'll be listed there in the risks. And you can size it up as well to see if it's going to have a material impact on earnings or not. Now, Datadog has a market cap over $50 billion. Any large company is going to have tons of lawsuits out there. If you're really worried about a lawsuit and it's a big position in your portfolio, you can always go to LegalZoom.com and hire a lawyer for like $35 or $40 an hour and talk to that lawyer about that. But never fear a lawsuit. Like people come after me every now and then as well. I never fear a lawsuit. I always win. But never fear one. Every big company has lawsuits. And the way you know you're successful is if people come after you and try to take money from you. Okay. All right. Next question is, as a European, should I buy European government bonds or US government bonds? What is the logic behind? Yeah. So you got to be careful of currency exposure. So if you live in Europe and the US dollar strengthens a lot, that will impact your portfolio and vice versa as well. So I would make sure to have a diversified portfolio of different government bond instruments that are exposed to US dollar as well as to European currencies, whether it's the euro or the pound. Now, my investment methodology that I've always talked about is in your portfolio, I don't want more than 5% to be in any one particular asset class. Okay, and Ray wrote, what percent of bonds should be inflation protected? All of them? No, not all of them, because you're going to cap your upside. So government or corporate bonds are not usually inflation protected unless there's some exotic ETF that's created for it. But what you can do is you can go to treasurydirect.gov and buy inflation protected securities there. And I actually own these. Please do your own research first. But the way it works, let me go there with you really quickly and show you how the process works. So we can go directly to treasurydirect.gov, okay, and you can't buy what I'm about to show you from brokers, meaning big firms like JP Morgan, et cetera. Hence the name Treasury Direct. You buy directly from the government. So what you can do is you can buy what are called Series I savings bonds. And this is something you want to hold long term, otherwise there's penalties. And I think you could put in 10 grand per year if you live in the United States. And the way this works is every 6 months, meaning May 1st and October 31st. If interest rates go up, this goes up. If interest rates go down, this goes down. And a couple of years ago, I owned this, and I told everybody to buy it as well. And the rate was closer to 10%, right? But if you think that rates are going to be coming down in the next 6 months, which a lot of people do, then this number will probably go down. Yeah. And I still recommend just the 5% rule for that as well. Okay. And if you want to look at other tickers for Treasury inflation protected securities, you can look at ticker TIP and SPIP as well. And when you do due diligence on ETFs, you can always go to etfdb.com. That's etfdatabase.com. I don't get any royalties from any company I mentioned. Nobody sponsors me. I don't want any sponsorships. Okay. Okay, next question is a 5x5 company? And what that means, by the way, I mentioned this before, is I love to invest in companies that I believe have a 500% return within 5 years. Am I usually wrong? Oh, hell yeah. But if I get it a little bit right, maybe it goes up a couple 100%. And usually when you invest in companies you think are a 5x5, it has to be smaller or mid-cap stocks, because usually very large companies will not be a 5x5. But your question is a 5x5 company have a 5-year revenue CAGR of over 50%? What that means is this. So CAGR means compound annual growth rates. Okay, so I don't really look at revenue when it comes to looking at 5x5s as much. Obviously, this is crucial. But the most important thing for me is what is the EPS estimate going to be in 5 years? And so here's how valuation works, right, roughly. So the S&P 500 usually trades roughly around 15 times earnings. And the average company in the S&P 500 grows earnings at about 15% over time. So that's a ratio of 15 to 15, which is 1. If a company in the S&P 500 has earnings growth of 20%, it usually trades at a premium, like 20 times earnings. If a company in the S&P 500 has earnings growth of 10%, usually trades at around 10 times. Now, what I love to do is I love to forecast financial statements, and a lot of smart money managers do this. Not that I'm smart, but you know. And so I love to forecast financial statements to the extent that in 5 years, I like to see what earnings are going to be. So if earnings per share in 5 years for me, let's say there's 20% growth between year 4 and 5, then in year 5, I value that company on 20 times earnings per share. So that's your target price. And I don't really care about volatility. I do my homework and I buy. I don't care about the path. I care about the destination. That's how I want you to look at it as well. Earlier, somebody mentioned a Datadog. So Datadog's PE, if you look at Yahoo Finance, is probably 400 times or something crazy like that. It doesn't matter what earnings are this year. What matters more is what earnings are going to be in 5 years, hence the $50 billion market cap of that company. All right, next question is, what are your top 3 AI tools? So for me, ChatGPT, because I love using deep research in ChatGPT 5. The second one for me is Descript, Descript, and I use that for closed captioning and much more for my videos for free, right? That way I don't have to pay rev.com, which is a ripoff. And then probably my third one right now is community.harounventures.com. Just because we're using a version of AI Chris that I think that Anthony Sartell, my head of business development, has nailed. Yeah. Okay. Next question is, what parts of the 10Q do you review mostly? What are the questions you pose when you read one? Yeah. So the 10Q is like the 10K, except it's much smaller. There are fewer footnotes, and it's not audited. So yes, I review the footnotes thoroughly, but I pay much more attention to the 10K. And the way to analyze a 10K is as follows, okay? And don't invest in companies if you don't do this. Just buy ETFs, please. So what I do is there's a course I have called Forensic Financial Statement Analysis using AI. So I analyze the audit report thoroughly, right? And it's got to be a big name auditor, like a Big Four, like I mentioned at the beginning of today's webcast. Then I analyze the MD&A, which is what the company is talking about with respect to what they've done and what they're going to do. Okay, this is only in a 10K. And the way I do it is I have you enter in the ticker that you want to analyze, okay, the company. So you go here, you enter the company you want to analyze, the ticker, and then you select your AI prompt level in this product. Okay, so you can do 8th grade, which is my maturity, hedge fund level, etc. Then I ask you tons of questions about the 10K, okay, and I create tons of AI prompts for you. So, for example, you do MD&A analysis on the company itself. I ask you tons of questions, which creates a report for you. We do the same thing with the income statement, okay? You analyze tons and tons of things in terms of revenue and expense disclosure, yada, yada. And then the balance sheet and cash flow statement. And the most important thing you can analyze is always what are called the footnotes, okay? And the footnotes are kind of like, remember when you're in university or high school, you wrote a paper and you had a little number 1 or 2 beside something, and then you had a footnote. It's like that for financial statements. You cannot just look at the 3 financial statements and analyze them. The reason is because when you look at the 10K, there's footnotes beside a lot of the line items. And the footnotes will tell you much, much more about the financial statements. So for example, with the balance sheet, there's usually a footnote that will tell you how much debt is coming due over the next 5 years. That's crucial to look at, the footnote. You wouldn't see that just by looking at the balance sheet. And there's usually 10 to 15 different categories of footnotes, which I teach you about thoroughly in this course. Now, after you answer all the questions about the company you're doing investment research on, you got a 1-page executive summary that you can print out, show your boss, use for investment purposes, bring to interviews, informationals, etc. And there's a massive 24-page detailed report as well. If you have additional questions about what to look for in the 10K, etc., please let me know, and thank you as always. All right, let's try a different camera angle here. And if you guys have a question about how I set up my office, etc., let me know. I really do believe that a good Zoom setup does more for your career than a good Italian suit will do as well. I didn't tuck in my shirt today. Yeah. All right, let me go to the next question here. Next question is, how do you get into enterprise software sales? Yeah, it's one of the best jobs you can possibly get because software companies have insanely high gross margins of over 90%, as well as operating margins of often well over 30%. What does that mean for you? Well, for you as an enterprise software salesperson, that means that you're going to make bank. You're going to make a lot of money in terms of commissions. I have a lot of friends that work for enterprise software company sales here in the Bay Area that make $3 to $5 million a year. So how do you get in? Step 1. Have an incredible LinkedIn profile, which we can create for you. And go to the link in the description of this video, set up a call with us to learn more. Step 2, what you're going to do is you're going to learn how to network with people that work at companies that you want to work at where you have something in common with them. And we teach that as well. We also teach interview skills, etc. So how do you reach out to somebody? Well, let's say you want to work at Oracle, okay, in enterprise software sales. And let's say that you found somebody on doing an advanced search on LinkedIn that has a couple things in common with you. Like they went to the Toronto French School, which is where I went growing up. They went to McGill University, which is the undergrad I went to. And I live in the Bay Area. So I might reach out to John Smith, who works in enterprise software sales at Oracle here in the Bay Area. And I'll send this exact email. And this works, I promise you. John, hope all is well. I also went to the Toronto French School and McGill University, and I also live here in the Bay Area. Please let me know if you have time for a coffee or a quick Zoom call. That's it. Do that 30 times, and I promise you, you will get a meeting. But you got to follow through. You got to be a pit bull and a pork chop. Okay, never ever give up. As Mark Cuban said, you only have to be right in business one time. And as the best basketball player in history, who's not LeBron, kids, it's Michael Jordan, he said, I've failed over and over again in my life, and that's why I succeed. So it's like dating. Just keep at it. You will get those informational meetings. And if you think, why the hell would somebody take a meeting with me? Well, what I want you to do is think of this. Imagine it's 20 years in the future. You're way more successful than you already are today. And somebody reaches out to you that's 20 years younger that really reminds you of yourself. And they ask for an informational meeting. Would you take it? Of course you would. Make it happen. All right, great. You got the meeting. Now what? Well, what you're going to do is you're going to bond before business. You're going to talk, and this works, by the way, for selling products or meeting with C-level executives, etc. So in the first minute or two, you're going to bond before business because relationships are more important than product knowledge. You're going to talk about what you have in common. Okay. Or you go to their Instagram profile, see who they follow. You know, if they follow the Toronto Blue Jays or a great sports team I love, you can talk about that as well. Then you're going to, they're very nicely going to say, why are we meeting? They won't say it like that. And then you say, well, I'd love to learn more about what you do and how you got into Oracle, etc. They'll explain all that stuff, what they do. And here's the part you can't forget. Don't forget to ask for the sale. What does that mean? Well, you ask them, I would love to work for you. Do you have any openings, please? Remember, closed mouths don't get fed. If they say no, then you say, do you know anybody else that went to our school you can introduce me to in software sales? I would be grateful. This works. I promise you. But you can never give up. Be that pit bull on a pork chop. It's like dating. If I told you, you asked out 30 supermodels, and the 30 of them said no, and the 31st said yes, would you fail 30 times? Of course you would. Make it happen. Yeah. Okay. And then obviously you have to have some knowledge of software as well. Meaning you can go work for a software company, maybe on the tech side, then get into pre-sales and then sales eventually. Or you can take a lot of online courses and express your passion for enterprise software as well in your LinkedIn profile. Now, the two most important fields in LinkedIn are number one, your title, okay, and number two, the about section. Make sure you include a lot of stuff about enterprise software in both of those. Yeah. Yeah, and I have a consulting business as well. If you're interested, what I do is I spend 10 hours with you one-on-one and 300 hours per year in small group Zoom coaching meetings, and I help you get that job or your money back. And if you're interested in meeting with me or working with us, just go to the link in the description of this video and set up a call, please. Thanks. And if you're listening on Spotify, just go to harounmba.com and then at the bottom, click the book a call button. All right. Next question is, can you learn public speaking through mimicking and memorizing famous speeches? Which ones? Yeah, absolutely. Memorizing and understanding. So what I love to do, and I teach all about public speaking, and I'll show you where I teach it. So for those that signed up for my Circle product today, I teach it in my MBA program. And then what I also do is I teach it in my complete presentation and public speaking course where I gave a TEDx years ago. But what I always mention is what I want you to do is this. I want you to watch Academy Award winning speeches. And I want you to mimic them and just speak from the heart. And one of my favorite speeches is from Matthew McConaughey, who got Best Actor for Dallas Buyers Club, I think 10, 15 years ago. I want you to watch that. I want you to watch all speeches. I want you to focus on people that speak clearly, especially people like Meryl Streep. So you can definitely do that. In terms of other speeches, yeah, definitely watch speeches by Dr. Martin Luther King, by Barack Obama, who I love but I didn't vote for, etc. Yeah, you can definitely learn. Yeah. And then you can also, in addition to taking my course and networking with the gazillions of people in my courses and practicing with each other, what you can also do is you can use an AI product to practice. And a very good friend of mine, Haroun, who's been on my webcast a number of times, he started a company, and you guys can all use what I'm about to show you for free. It's called Udly.ai. Okay. And he just got, I think, a Series A. He got $20 million from, I think, same venture capital firm invested in in Microsoft. But what you're going to do is you're going to try this product for free. It's awesome. Okay. And it's going to record you giving a speech. It's free to do. Okay. And it's going to tell you if you're speaking too fast. And if I'm speaking too fast, please tell me. Okay. It also tells you if you use or ah too many times, your body language, are you making eye contact enough, etc. So practice for interviews, sales calls, speeches, etc. Going to udemy.ai. Use it, love it, learn it. It's free. Okay. Next question is from Ray. Do you pay for ChatGPT 5? Yes. Yes. And here's why. The absolute best AI product on the planet right now is ChatGPT 5 Deep Research. So the way to do it is you select ChatGPT 5 here. If you pay $20 a month, you get a couple of these, or maybe 20 of them. For me, I pay $200 a month and I get several hundreds. So you go to ChatGPT 5 and then you click here on plus and then you go Deep Research, okay? And then you type in your prompt, right? So I've got 245 left between now and I guess October 9th. Yeah, I should use it more. And then you're going to type in your prompt here. Make it a long prompt, okay? It's then going to come back and ask you questions about the prompt. And then it takes about 20 minutes, you see a progress bar, before it completes the deep research, and it's life-changing. Life-changing, yeah. Be careful not to rely too much on ChatGPT and AI, though, as I really think it kills your IQ over time. And there's been a lot of studies done from various universities saying that your intelligence actually decreases the more you rely on ChatGPT. So don't forget to push yourself to write essays and articles yourself too. Okay. All right, next up, Malcolm wrote, good to see you, Chris. Good to see you too. I'm planning to build a growth-oriented portfolio. Okay, so for those who are not familiar with growth, there's two classes of investors. There's growth investors that buy expensive stuff that's growing fast. And there's value investors that buy cheap stuff that has high dividend yields like Warren Buffett that's not really growing as fast. You're one or the other. Not both. It's like religion. Yeah, people hate each other. They're growth or value investors. All right, so I'm planning to build a growth-oriented portfolio with 60% global growth ETFs. And I want to hold a few stocks I believe in the long term. Dollarama, Walmart, Santec, and Suncor. Yeah, those don't sound like growth stocks to me. They sound, especially like Walmart, a little bit more value-ish. Yeah. And then you wrote, I also want to buy GLD, ticker GLD for gold, which just passed $4,000. I love gold. I've mentioned I own it many times before. Now it's not the time to buy. Yeah, you wait till everyone's panicking. Yeah. In GLD, you're using your 5% rule. My question is it okay for me as a young investor to hold these individual stocks? Some say no, but there are some stocks I believe that aren't held in ETF that I want to hold. Yeah. So what I would do is do thorough investment research using my 100-step template I showed you earlier today. Okay. And after you do the research on those stocks, then put those in your portfolio, maximum 5% each. Yeah. And I get the question every now and then, what percent of my portfolio should be riskier stocks versus less risky stocks? Well, growth-oriented stocks are riskier, relatively speaking. So this is an old school private wealth management rule, which is this. You take 100 minus your age. So if I'm 90 years old, 100 minus 90 is 10. That means 10% of my portfolio should be in growth-oriented or riskier stocks, and 90% in lower risk stocks, maybe value stocks, maybe AAA rated government bonds. And the reason why we say that is because you have less time in your life to make it back. The reason I say it's old school is because there's a lot of people watching this webcast right now that will make it to 150. It's true. Now, if you're 20 years old, 100 minus 20 is 80. So 80% of your portfolio should, if you want, after your research, be in growth-oriented or slightly riskier stocks, and 20% in low-risk stuff because you got the rest of your life to make it up. Yeah. Thank you for that, and God bless you more. All right, next up, Armand wrote, hey, Chris, hope you're doing well. Likewise. What are your thoughts on investing in Africa and other emerging markets? Yeah. So if you're going to invest in private companies, just be really careful because most private companies you invest in will go to zero. In fact, if you look at the top 10, I'll get to public in a second. If you look at the top 10 venture capital firms on the planet, only 1% of their investments are unicorn companies, meaning companies that hit it out of the park with a market cap of $1 billion or more. Right? So just be careful. I don't recommend investing in private companies. But if you want to invest in publicly traded companies in Africa, for example, and there's lots of micro funds as well, I don't want more than 5% of your portfolio to be in any one particular company. And you got to be careful also, because you got to make sure that these emerging markets, I'm not just talking about Africa, but emerging markets in general, make sure that they're liquid. Never invest in a stock where you own more than 10% of the average daily trading volume. So if a stock trades 100,000 shares a day, I don't want you to own more than 10,000 shares. And the reason I say that is because if you try to sell it, you might force it down, because illiquid stocks own you in a down market instead of the opposite of that. You also want to look closely at beta. Okay, so beta is a measure of risk. So the S&P 500 has a beta of 1. If a company like a Tesla is more risky and has a beta of 2, that means if the S&P 500 goes up 1%, Tesla goes up 1% and vice versa. So when you look at your broader portfolio, in addition to being diversified with 20 companies, make sure you look at your beta exposure as well. And I can talk about that formula in more detail if you want me to. This is what hedge funds do. Yeah. But just be careful now with emerging markets. I've been so burned in the past investing in emerging markets that don't have sound accounting. So for example, years ago I invested in China and I invested in Russia. And when we were allowed to invest in Russia. And I remember owning Lukoil and Gazprom because the PE was only 3 or 4 times, but it was a lie. The accounting was BS. Don't trust it. Yeah. Do your research first. Okay, in terms of how do you evaluate emerging market stocks, use the templates I showed you earlier, please. Thanks. All right, next up we have Manas from Calcutta. How are you? 11% of my students are from India. Always great to see you. Warm my heart, brother. And you wrote, let's push the goalpost out. That's how Canadians say it. I like that. Good. Great. You wrote, my first question is, with the new Japanese prime minister, or the first female prime minister in Japanese history, who wants to jack up the rates, what will happen to the yen and the yen carry trade? Also, how much of an impact Japan and its fiscal policy will have on the world in the next 4 years under Trump? Yeah. So, United States has around $36 trillion in debt, and I think the largest owner of American debt is Japan, with I think $2.7 trillion or so. Yeah. And so, if Japan were to sell a lot of U.S. treasuries, that would really hurt the U.S. economy. And there's an inverse relationship between bonds and yields. And so what happened earlier this year when there was the trade wars going on in April is the largest owner of U.S. debt, Japan, and the second largest owner, China, which has, I think, 800 billion or so, maybe a little bit less now. What they did is they got together and they sold tons of U.S. treasuries, okay, a lot of U.S. debt. And they did that on purpose, right, to drive up interest rates. And that's one of the reasons why President Trump said, okay, let's put this whole tariff thing on hold temporarily. Yeah. So if Japan were to materially raise rates, it would impact the global stock market, and here's why. Japanese rates have been low forever, right? They just can't grow their economy. It's really, really tough. They're in secular decline. There's 130 million people in Japan right now, going to 80 million in a couple of decades. It's really sad. And because rates have been so low for so many years in Japan, what a lot of hedge funds in the United States and globally have been doing is this. They've been borrowing in yen because rates are relatively low and investing in companies. And then in August of last year, August of 2024, they unexpectedly raised rates a bit, and they caused a lot of hedge funds to go bankrupt because the cost to borrow was much, much higher. So if Japan were to materially increase interest rates, what would happen is the yen carry trade would officially be over, which would impact global markets. Would global markets crash? No. Maybe they pull back 10 to 15%. I don't really know. I don't care, because I'm a long-term investor, which we should all be. When Warren Buffett buys a stock, he always assumes the market's going to be closed for 10 years after he buys it. He bought Coca-Cola in 1990-ish. He still owns it today. Yeah, be a long-term investor. Yeah, and a lot of people ask me about bubbles, when's the market going to crash, etc. We don't know the answer. Nobody ever does. And this is why day trading doesn't work. Because a black swan event, something you just can't forecast, will cause the markets to fall. You got to be long-term focused. And I used to work at a hedge fund years ago called Pequot. And Art Sandberg, the brilliant founder, God bless me, died from pancreatic cancer. I'm praying for you and your family not too long ago. But Art Sandberg, it was the biggest tech hedge fund at one point. But I remember at one point, it was in, I think, '06, maybe '07. We were pitching to him non-tech stocks to short, like Lennar and KBH. Those are home builders, ticker LEN. And we said to him at the time, you know, the housing market is insane. There's a bubble. And he very politely stopped us and said, son, I want to stop you on that short pitch because I've been around long enough to know never to stand in the way of insanity. Markets peak, markets trough. You just can't time it. That's why you need to be long-term focused. Let me move on to the next question now. Okay. Okay. What will the impact of Trump policy have in the next 4 years? It's a tough question. I'd say any sector where you think there's going to be material government deregulation, meaning less rules, that is amazing for stocks, right? Smaller government means better for the stock market, in my humble opinion. Yeah. So if there are fewer crazy bureaucratic rules in different sectors, stocks will do better. So if you think there's going to be massive deregulation in financial services, then financial services stocks would be great. Yeah. But I don't really look at it that way. I like to look bottoms up for each stock. I like to ask myself, in 5 years, will this company be more relevant or less relevant than it is today? Yeah. Yeah. And don't focus on what Trump says. Focus on what he does. And there's enough checks and balances in the United States to keep less rational decisions in check. On both sides, Democrats and Republicans. Okay. Yeah. Yeah. And I did not vote in the last election. Yeah. I'm more of a libertarian, but I go Republican, Democrat. It depends on the candidate. Yeah. I just couldn't vote this past election. Okay. What is the worst case scenario for BYD, which is the Chinese equivalent of Tesla? It's a better company, actually, better products at half the price. The reason you don't see them in America is because of tariffs. What is the worst case scenario for BYD as Tesla cut its prices and launched a $30,000 model, even when they know they can't compete with a price with BYD? I don't think Tesla, at this point, and I could change my opinion, I don't think Tesla can really compete with BYD when it comes to prices. Yeah. Yeah. All right. Next question is, you talk about debt to GDP. Sometimes, why does debt to GDP of Italy or UK and Spain or France bother you, as all of them have around 150% of GDP, especially UK external debt GDP is around 300%. Yeah. I don't look at it that way. So when you talk about debt, first world countries have a lot of outstanding debt. Okay, so United States, we all know, has tons of outstanding debt, right? You don't run a country like a company. It is what it is. The very last company to ever go bankrupt would be the U.S. government. So I don't think there's ever a risk that China's going to sell all U.S. debt, or Japan, because it would hurt them more. Yeah. Yeah, and the same thing with first world countries. Of course, debt can get out of control for first world countries, but there's enough checks and balances in place to make sure they're okay. Unlike emerging markets or Latin America, for example, like Argentina, which defaulted on its debt back in '94, I think it was. Yeah. Hey, Peter. Peter wrote, will the new HEV community be replacing or be in addition to the old HEV Discord channel? Oh, replacing. Yeah. Yeah. So our new community product it's incredible. Yeah. So we invested a lot in this. And there's going to be tons of events exclusive for HEV community members, community.harounventures.com, a lot of AI members and all that stuff. We just launched it. This is version 1, the pilot. And that's why, for those of you that got an email from me, you get a deeply discounted rate to join, which expires October 15th. Yeah. Okay. And the great thing also is it works on an Android device as well as it's our own branded app. Android device as well as iOS. Yeah, and hats off to my head of business development, Anthony Sertel, who's done a superb job on this. Yeah, yeah, because that's one of the one of the things I was missing was we used Slack for a while, then Discord, and a lot of people love Discord, but if you're not super techie, it's a little bit intimidating. But our new community platform does way more than Discord ever could. Yeah. And it's to help you all network as well. All right, let's move on to the next question. If you're ever giving a speech and you lose your voice, you got to get this product called Clear Voice. It works. Okay. Okay, next question is, why did the DOJ, Department of Justice, let Nvidia buy 10% of AMD versus via OpenAI deal? Yeah. And Oracle as well. Yeah. So the reason is that AI is so strategic to the future national security of the United States that the DOJ is allowing this to happen. Usually it would not allow this for antitrust reasons. Yeah. My thought process on semiconductor stocks or anything related to AI is that if you create any AI related hardware or chips, you should not pay tax for 10 years. There should be a tax moratorium. Yeah. This is such a big deal with government policy that I have friends that work at very large tech companies you've all heard of. And when they have a conference call with somebody from Hong Kong, for example, they're not allowed to mention the letters AI. Yeah. And we can talk about Taiwan and Taiwan Semi if you want to. It's very strategic. Yeah. Do you see OpenAI going public in $1 trillion IPO before the bubble bursts, as it's already valued at $500 billion? Yeah, absolutely. But it depends on timing, right? So historically, companies would wait until they have $1 billion market cap before going public. And then around circa 2012 or so, a lot of companies were waiting longer before going public as hedge funds and mutual funds started investing in later stage venture capital rounds. So it just depends on timing. Yeah. Okay. All right. Next question is 51% of earnings for the S&P 500 came from the Mag 7. Big tech stocks, yeah. That means the markets are afloat because of this AI spending earnings. Do you think we're at the beginning of a bubble or not? Yeah, I mean, if it probably, but I don't really care. I'm long-term focused. If you go back to 2007, 40% of all operating profit from S&P 500 companies came from financial services companies. And we know what happened in 2008. Yeah. But if you bought stocks at the peak of the market, like a good portfolio in 07, and you just held, you're up huge. It looks like this, the chart of that stock, those stocks. 04, 05, 06, 07, 08, 9, 10, 11, 12, 13, 2020, Q1, 2020. So don't focus on the path, focus on the destination. Buy and hold after you do your homework. You'll sleep better at night, and your net worth will be materially higher. That much I promise you. Yeah. And I have a lot of clients that start out as day traders. I convince them not to do it. And if you go back to April of this year when Trump started talking about tariffs, you can look at the chart of Nvidia, any tech stock, any stock. Stock looked like death, like you're catching a falling knife. But in hindsight, it looks like this. April, here we are now. Just be a long-term holder. And whenever you see crazy volatility and an RSI of 20 million oversold stock that you love, just buy more. Yeah. Next question is from Zimmer. Zimmer, I haven't seen you before on the call. Welcome. Excellent. You remind me of Don Zimmer, who was the coach for the Yankees. All right. And for any Yankee fans out there, Blue Jays fan, you know what that is? That's the world's smallest violin. Okay. So Zimmer wrote, I would like to ask if there are any alternatives to Yahoo Finance for getting historical data for stocks, since data in Yahoo Finance cannot be copy-pasted anymore. It can be. It depends where you live, right? If you're in Scandinavian countries, you can't do it. So what you can do is get a VPN and then just say you're from the United States using the VPN if you want. My favorite VPN product I use is called ExpressVPN. So try that. Yeah. Or try a different browser. Yeah. But the VPN will work, I promise you. Yeah. But I don't want you to copy and paste financial statements from Yahoo Finance ever. Historical stock data, that's fine. Financial statements, you're always going to go directly to the source, meaning sec.gov. Yeah. Okay. Manas said, you said not to learn how to code per Huang's advice. Yeah. So Jensen Huang, the brilliant founder and CEO of Nvidia, I think it was last year, he gave a presentation. He said the worst thing you can possibly do as a student is study how to program. And the reason is that AI was officially made so that it's easier for developers to do their job. And I'm seeing it here on the front lines. I live here in the Bay Area. You know, Meta fired, I think, 6,000 developers recently. Amazon did the same. I have tons of clients that work in software development that are terrified, and they're trying to change careers into finance or other sectors. Don't study that as your major in school. It's cool maybe take an online course or two on it, but don't make that your profession longer term. It's all going to end badly. That much I promise you. Okay. Next question is, can I build my own hedge fund for a few $1,000s? Only if it's your own money. You can't take any investor money. And the reason I say that is because there's a lot of fees when you start a hedge fund. So I launched a hedge fund, years ago. I raised managed over $1 billion in my career. You have to have critical mass. So I would say to start an onshore hedge fund, you need at least $10 million to make it worthwhile. Okay. And the fees usually are 2 and 20. The 2% annual management fee, that would be $200,000, right? To pay for all your expenses. Yeah. If you're going to do offshore, it'd be much more expensive as well. Yeah. Plus there's legal fees, right? And you can pay legal fees, all the way up to, for a smaller hedge fund, you could start at maybe 10 grand legal fees. If you want to do offshore as well, it's going to cost you 40 or 50 grand. Yeah, so those are additional expenses. You can build a fund for that. Talk to your accountant first. You can amortize it over 5 years, meaning over 60 months. Yeah, but still, it's a big upfront expense. Yeah, and you never want to start a hedge fund without talking to a securities lawyer first, because you got to get an investment offering memorandum done for you, as well as what are called subscription documents. Subscription documents, basically your investors fill it out, see if they're accredited investors, meaning do they have a big liquid net worth, and there's AML, meaning anti-money laundering stuff that was added to that post the Patriot Act. Yeah. Okay, next question is gold, ticker GLD, the ETF, yeah, reached an all-time high, and the S&P reached an all-time high, and also Bitcoin reached an all-time high. What is happening here? Because the S&P and gold basically have an opposite growth direction. How do they merge and why? Yeah. So it's a great question. I think there's a lot of investors that are fearful that we could get a big economic, a global economic pullback because of tariffs. And so a lot of them been piling into flight to quality, which is GLD. Yeah. Also, India is now the largest country in the world by population, largest democracy. I love India. And obviously, a massive consumer of gold there. Yeah. Okay. Manas wrote, according to people familiar with the matter, since ChatGPT, there are 30% lesser beginner-level jobs now than before. Any comments on that? Now, that's a big exaggeration. Yes, AI is going to impact all of us, but things are never as bad as we think, okay? And we always adapt, too. Like, I remember back in the 1980s when I was a teenager. I am that old. We were worried that Japanese robotics, and especially robotics and machinery in auto plants, were going to replace all jobs. Didn't happen. If you go to 1999, when Google first came out at beta, everybody was worried, teachers were worried that, oh my God, students are not going to learn anymore. They overreacted. The same skeptics in the fall of 2001 when Wikipedia was released said, oh no, we're going to rely on Wikipedia. Students aren't going to be learning anymore. AI is an enabler. It helps us to work smarter and not harder. And I think it's a beautiful thing. And I want you all to embrace it right now. Okay? Embrace it right now and make yourself way more productive than your peers. Then you'll win this war. And we use a lot of AI as well on my website, as well as in my new community product as well. Embrace it, please. It works. And we always adapt. Maybe we work 4 days a week instead of 5. I don't know. And maybe we have a better standard of living because of it. Don't forget that, a couple hundred years ago, 96% of the population worked in agriculture. We always adapt. Don't pay attention to the media ever. Okay? Always do your own research on stocks, everything. The media tries to scare the hell out of us for ratings reasons. Like you'll watch Fox News or CNN. Okay, I'm covering the left and the right there. And then they'll say something like this. Find out why AI is going to destroy the world after this commercial break. Yeah. And try to disrupt yourself too before the marketplace does. The smartest executives do that. So, for example, Reed Hastings, the brilliant, former CEO and founder of Netflix. Netflix was once a DVD rental service. He knew that 5 or 10 years in the future, we'd be streaming this stuff. So he disrupted his own business model with streaming. Disrupt yourself and your own company. Yeah. And it's a great thing. Look, I'm so bullish on what AI is going to do to the markets, right? So this here is an income statement, okay? So if some of these jobs or tasks can be replaced with AI, then what happens is you get rid of a couple of these, not all of them. This goes up a lot. That's good for the stock market. That's good for cash in your pocket. Yeah. All right. I love what I do. Next question is, I'm very optimistic about our generation and the future and present. But sometimes I get darkly skeptical of doomsday. And I do not watch the news. You know where I was going with that. Still, I don't want to die broke or alone. How do I fix myself? No, brother. No, things are never as bad as you think. Okay, so a couple things. Be really, really careful with social media comments, especially on TikTok. Okay, so it's deadly. And I believe there's foreign governments. I'm not a crazy conspiracy nut, but I believe that foreign governments have created lots of bots that will put extreme comments on TikTok videos. And the reason they do that is the extreme comments make Democrats more Democrat, move more left, much more left. And it makes Republicans more right. So if Russia, I'm pretty sure this is happening, I can't confirm it, but if Russia creates bots to make public opinion widen in the United States, right, and globally, then that's a good thing for Russia, not good for us. And I think that whoever takes over TikTok, Larry Ellison, Oracle, whatever it is, I think we need to amend comments. Like you have to have a real email address to do it. Yeah, it's easy to have hate speech if your real name is not there. But I think there should be a slight amendment to the First Amendment, very slight, to the extent that hate speech is not allowed online, period. Yeah, freedom of speech is important, but hate speech is wrong. Yeah. And you wrote, thank you so much for my guardian age. I love you, man. And I'll see you today at 10 a.m. for our weekly premium 3-hour and 20-minute call, Zoom call with my clients. And remember the homework I gave you last week in terms of that new product you're going to be releasing very soon. I'll hold you accountable. I say it with love in my heart to help you make money on that. Okay. Yeah. Okay. Do you think quantum computing with beat? I don't understand the question. Sorry. Please rephrase. MIT said 9 of 10 AI companies will fail in the next decade. So did the CEO of Alibaba. Could you agree? Yes or no, and why? Yeah. So generally speaking, whenever there's a new shiny toy or a new growth market, bubbles exist. Okay. It happened in the 1600s in Holland. Okay. You had the tulip bubble where tulips went up thousands of times in price. Everybody chased it. It crashed eventually. Right. That's kind of how the options market were created. It also happened back in the late 1990s with dot-com bubble 1, where really crappy companies were leveraging, having an internet address, like pets.com, like a moronic business model. Remember that pet? They spent billions of dollars on this thing, and they tried to compete with Amazon. They couldn't. And it happened with cryptos. It's still happening with cryptos. Okay. It happened with NFTs. Remember in late 2020. It's happening now with AI. So yes, all ships rise initially with a new shiny toy, new emerging sector, but a lot of the crap goes belly up eventually. Yeah. But in terms of 90%, I think that's a little bit extreme. Yeah. And I love all your questions, Manas. Thank you for that. Okay. Give me 1 second. If you had to explain life in 3 lines, whoa. What would they be? Take your time, but just 3 words. Sure. God loves me. That's it. I don't want you guys to freak out, okay? about anything in life. We tend to worry about crap that never occurs. Sir Winston Churchill said that he once met a man on his deathbed who talked about all the worries he had in his life, none of which came true. And for those of you that have a career setback, it's not a setback. It's a stepping stone. You just don't understand it yet. So there's this great passage from the Old Testament. It's the book of Job, J-O-B, prophetic Job. And it's about this dude that lost almost everything, but not his faith. Okay? God loved Job. And as a result, everything worked out for him in the long run. And for those of you that have had career setbacks, you don't understand this now. But many years you're going to look back and say, thank you, God. Now I understand why you sent me in a different direction. Okay, that stone wasn't blocking me. It was a stepping stone. Now, I'm going to ask you guys a couple questions. Number one, and answer it out loud. Number one, do you believe in God? Number two, does God believe in you? Well, if you don't believe in yourself, then you might have to question your faith. And we're never going to question our faith. So the 3 words, God loves you. Don't worry. And when you stress out about crap, like career stuff, as long as you work hard, I promise you everything's going to work out. It always does. It always does. Have faith. Have faith in the path that God is guiding you down. It'll all make sense. And God wants you to be happy every single day. So be happy now. When I wake up every morning, what I do is this. I thank God for 10 things in this order. Andrew, Matthew, Dylan. Was that the right order? Anyway, these 3 kids. Andrew, Matthew, Dylan, my wife, Christine, my mom, my dad, my brother, Jamie, the memory of my sister who passed away last year. I love you so much. I'm so sorry you were suffering from that illness for years. As well as my other sister, Elizabeth, and all of you. Those are the 10 things I'm grateful for. You practice gratitude every single day before you get up. And life works better. There's no such thing as retail therapy unless you buy GTA 6 if it ever comes out. Then that's retail therapy. But your riches consist in what you own, what you have right now in your life. Okay? Your riches consist in what you have right now in your life, not what you want to accumulate. Live for today. Be happy today. And when I was younger, I was an idiot because I wanted to make a fortune and then live my life. I want to make a fortune, then have kids and live my life. Kind of moronic, isn't it? Like how so many people work so hard so that they hate their job. They work so hard so they can retire and enjoy the last 5 years of their life swinging one of these things around. And when I retire, dude, I'm not playing golf. I'm playing video games. I'm never retiring. Live for today. Be happy now. Be happy every day. And what can make you happier every day is if you consume the right nutrition and you exercise every day. So what I do is this. And I'm about to release a vlog on this topic. I'm releasing a new vlog on the TV show Suits on Monday, I think. Yeah. And I talk about this. So this is my setup, my office here, okay? All right. So I get my 10 to 20,000 steps every single day in my office, okay? And I can type as well. It works. And by doing this, it extends my life and it makes me happier too. It releases endorphins. This is like my Prozac treadmill. This works. You got to do this. It makes you 10 times more productive. I'm thinking much faster right now as well. And I'm speaking gooder as well. You got to do this. You got to take care of your body. If you take care of this, this works gooder. So anyway, God loves you. God created you. So take care of this. Don't disrespect God. Okay. Anyway, you asked me for 3 words. God loves you. All right. I'm in the darkness, but God said, let there be light. Okay. That was cheesy, but that's okay. I can't seem to get this green screen perfect. You see on my sleeve here, it's not working. All right. If you strive for perfection, you'll never reach it, right? Okay. Okie dokie. Elif, how are you? Oh my God, it's been a while. Great to see you. Great to see you. Yeah, excellent. I'm always good, thanks. I think last time we talked, you were in Qatar, or as some Americans call it, Qatar. But you're from Turkey. I think you were heading home or something, right? Great to see you. Great to see you. Yeah. Okay. All right. Next up, Naveed wrote, "Hey Chris, you mentioned you stopped investing in cryptos. Any reason that you can share with us?" No, I never said that. I've always publicly disclosed the 4 cryptos I own. I've owned them for years. They're in a special IRA. Okay. So Bitcoin, Ethereum, Litecoin, and Ripple. Yeah. But I will say that 99% of cryptos are a scam. There's way more cryptos than there are fiat, meaning paper-based currency today. So that's a bubble. Yeah. But do your research first. And in my programs, you can go to the link in the description of this video or go to harounmba.com and book a call with us. I teach you how to invest in cryptos the right way. The problem with cryptocurrencies is they're not regulated by governments. They're kind of regulated by the laws of mathematics, if at all. So before you invest, I do a case study on the Facebook IPO in my program on my website. But before you invest in a stock, you read what is called the S1. Okay, and this is the investment offering memorandum, which lists all the risks and tells you all the stuff about the stock you're about to invest in. The problem with cryptocurrencies is there's a white paper sometimes, 10 to 15 pages of a cryptic PDF. There's no investment offering memorandum. So I teach you how to create one of these things for the cryptos you're going to invest in. It's not perfect, but it's good enough, I think. And I've said many times, I don't want more than 5% of your liquid net worth to be in cryptos. Yeah. Okay. Naveed wrote, "What's the future prospect for Bitcoin and Ethereum in the next 5 to 10 years time frame?" I'm never selling either. Do your research first, please. But I'm never selling them. I think at some point in my life, I don't know when, I don't care when, Bitcoin will be $1 million per coin. It's going to happen. I don't know when. I don't know the path, but I know the destination. If cryptos are at an all-time high, don't buy it now. You'll be able to buy it cheaper. Always tell yourself that with any asset class. Be careful of FOMO, fear of missing out. Don't chase trends. Wait until they're out of favor. And always tell yourself, oh, I can buy it cheaper. Yeah. I prefer Bitcoin over Ethereum. I own both, as I mentioned. I prefer Bitcoin over Ethereum because there will never be more than 21 million Bitcoin that'll ever be mined, okay, ever created by the year 2140, right? So I love usually investing in stuff where demand goes up and supply goes up slower than demand. That's a simple thing to say, I know. The one thing that bothers me about Ethereum, although I do own it, is that there's no limit in terms of the total supply that's going to be available on Ethereum. So you can get really diluted. But I love Ethereum because it's like a platform. The best investments in history and tech are platforms. eBay is an auction platform. LinkedIn is a social media platform for business people. iOS is a platform for everyone that uses this stuff, and all those aforementioned companies make money off stuff that's put on the platform. The same thing with Ethereum. Ethereum is a platform, okay? And the great thing about it is that most cryptos that go public, meaning ICOs, are done on the Ethereum platform. Same thing with NFTs, done on the Ethereum platform as well. Okay, Scrapper, hey bud, wrote, "Good morning, Chris. Hey. Not sure if you cover this in your real estate course. Can you please go into more detail of the operating logistics of your real estate investing?" And then it looks like you had a follow-up question. Do you mainly invest, in individual family homes, long-term or short-term rentals? Sounds tempting, but I'm concerned about damage by renters and people not paying their rent. Thank you. Yeah, a couple things. So let me first of all show you how to invest in real estate. Okay. So I have the complete real estate course exclusively available on my website. So there's different ways to invest in real estate, okay? Primary residence, right? Or you can rent out residential investment rentals or commercial, or do all of them, okay? The best investment anybody can make, by the way, on this call is owning the house you live in or apartment you live in, okay? And here's why. I'll show you why. This is kind of a silly example. Let's say you pay, I don't know, $2,500 per month, okay? And you do it over 50 years, and you think that the house is going to go up in value by that amount per year, plus you get depreciation write-off if it's an investment rental, and the interest write-off as well. There's a reason why really rich people own a lot of real estate. Donald Trump and Hillary Clinton, their first televised debate, in 2016. Hillary says, not fair, you don't pay taxes. Donald Trump said, well, and he was pretty transparent. He said, well, of course I don't, because I depreciate because I own real estate. So let's say that your total return is 12%. Okay. And let's say that you're going to rent for $2,500. Let me move this over a bit so you can see it. You rent $25 per month times 12 months times 50 years. Okay. So that means that over 50 years, you're going to spend $1.5 million. Now, if you took that $1.5 million and you invested $2,500 every month for 50 years at an annual return of 12%, how much would that be worth in 50 years? Whatever you guess, it's going to be higher. Here it is. $97 million. Okay? Watch what happens if we go up to just 13%. 147. It's unbelievable, the time value of money. Yeah. So what I recommend for you is before you invest in any real estate product, right? If you want to rent out residential, which is what I do, I own a lot of houses, right? I want you to complete this entire business plan first. Okay, this whole spreadsheet as part of the course. And then what I do is I teach you what the best investments are. You enter in the address of the place you want to buy. This is one of the houses I own in Canada, and this works in every country. And then I have you value using 5 valuation methodologies. I create all the mortgage stuff for you, financial statements, yada, yada, balance sheet, real estate formulas. And what comes out of it is a 1-page executive summary and a business plan. This here is 27-page business plan for you as well. And you can print it out as well if you want to. Yeah. Failing to plan is plan to fail. So I recommend that you complete a business plan on the real estate property you want to buy, kind of like how I have you use my templates to create business plans on any investment you want to make. Failing to plan is plan to fail. Yeah. and it's my dream for all my clients to be able to make more money from your real estate investment rental properties in 10 years than you do from your base salary. Okay. And this creates generational wealth. And of course, you got to make sure that whatever you rent the property for covers the mortgage. And you got to put down at least 20%. Now, in terms of your question on short-term or long-term rentals, and are you worried about them destroying your house that they're renting, etc. Yeah, so what I do is this. You're going to get, and I explain this a lot in the course, okay, when you rent out this property. And before you buy a place you want to rent out, you want to make sure that you go to Airbnb to find out if you can rent out in that area and what you can rent out places for. And for those of you buying a house for the first time or a second time, whatever, what I want you to do is when you buy the house, I want you to look to see if where you live, you can rent out the place. So for example, this room here, I used to rent this out. I don't know if you can see, but there's crown molding up there. This was an Airbnb room, okay? And there's an exit to the rest of the house, or to my backyard there. And I actually built another door on the side of the house to rent out 2 rooms. So we more than covered the mortgage with Airbnb rentals. But do your research first, okay? But what you're going to do is I recommend doing long-term rentals. And if somebody's going to trash the place, that's okay, sort of, because you're going to get insurance, okay? And I cover that in the course as well. Now, in terms of renting out the property, it takes a lot of work, man. And I want you to focus on your life and be happy. So what I do is I hire a real estate management company. And they ensure that the place is rented every single month of the year. Maybe I pay them like 10% per year in fees. It's totally worth it. And if there's anything wrong with the property, what they do is they email me directly. Like, I don't know, one of the pipes burst and I have to cover it, which sucks. But you outsource that always. Yeah. And if you have additional questions, please let me know. And thank you as always. Okay. Hey, Ted, how are you? Ted, you usually give me good dad humor. Please share a joke with me if you can. Yeah. Okay. Hey, Kyle the Jobber, first time seeing you on the call. Welcome. Hope you join us again. You wrote, keep up the good work. I like what you're doing. Thank you. Thank you. Appreciate it. Now for those of you that do Zoom, because I have a lot of lights in here, when I used to be interviewed in television on CNBC, etc., there's always a makeup dude that puts makeup in your face. This is going to sound out there, but if you have lights and you shine like me, it makes you look nervous, even though I have the AC blasting. So you're going to go to the pharmacy, and you're going to talk to somebody at the pharmacy and say, I want to get cover-up makeup that matches my skin color. And then you get rid of the shine as well. Maybe I'm beautiful. Maybe it's Maybelline. I know I used that joke before, right? And I run out of these things really fast because My nose is ginormous, but that's okay. I'm happy the way God created me. Okay. Okay, Terror Bear wrote, good morning, Chris. I remember when Matthew was born, 2005, Ken Griffin, I worked at Citadel, he sent the most incredible teddy bear, a nice note to him. He still has it. Terror Bear. Yeah. Good guy. So Terror Bear wrote, good morning, Chris. Good morning to you too. Glad you're all better. Thank you. Yeah. The reason I was a bit under the weather last week because I burned out. So I had my annual graduation in-person event. We went to Napa Valley together. I rented out Francis Ford Coppola's vineyard. It was a lot of fun. But I worked on the weekend. And it's a cardinal sin for me. And I want everybody to at least take off one day a week. Otherwise, your body won't keep up. Yeah. There's a reason God rested on the seventh day. He didn't have to. Okay. And you wrote here, what are your thoughts on business development as a role? Is it more of a sales-oriented job? And what are some of the key skill sets are necessary to know? Yeah. Business development basically means this. You're figuring out strategies to make this grow faster. Yeah. And so my head of business development, who also works in sales, Anthony Sertel, he's great. He created this community platform for us as well. And the intent was to materially help us grow revenues longer term so I can build 1,000 freaking schools in Africa. Yeah. So anyway, hopefully that sums that up. Yeah. In terms of the skill sets needed, if it's going to be sales oriented, obviously you got to be a sales oriented person, be pretty outgoing, etc. And you can learn that stuff, right? So for me, when I was younger, I was a developer at Accenture back in the 90s, and I was pretty shy. I was more of an introvert, I think. And I was kind of nervous at parties too. Oh my God, people, right? And then what I did was you got to run to your fears. And eventually you just become conditioned to it. And it's like Teflon, right? Yeah. So you have a sales-oriented personality. And the most successful people in business are great at sales. Entrepreneurs, they're salespeople. CEOs, they're salespeople. Partners in a law firm or venture capital firm, they're salespeople. That's how it works, yeah. In terms of business development, you have to be good at partnerships as well. Gripping and grinning and talking to people who work at other companies or internally as ways to try to see if you can accelerate revenue growth. Yeah. And if you have follow-up questions, let me know, please. Okay. But I teach you how to sell as well in my programs. Go to the link in the description, set up a call with somebody on my team if you're curious. Okay. All right, Francisco, hey bud. Wrote, why do you think Warren Buffett calls derivatives WMDs when hedge funds use them to make billions? Yeah, so Warren Buffett, he was back in the fall of 2008, and before that, he said that derivatives are financial weapons of mass destruction. Yeah. And the reason is, in the fall of 2008, when we were within 24 hours, the bank machine's not working. A lot of hedge funds and other firms like Lehman Brothers use massive leverage to the extent that for every $1 they had $40 invested. Okay, that was Lehman Brothers. And a lot of the top hedge funds, for every $1 they had $5 or $10 invested. That's deadly because the market moves a little bit against you. You lose 5 or 10 times more or 40 times more, which is why Lehman went belly up. Same thing with Bear Stearns and many other banks. Yeah, so it's deadly. And so for those of you not familiar with derivatives, the derivatives market is 6 times bigger than the global stock market. And under the derivatives umbrella, so remember in calculus class, this is the only time calculus will ever come in useful for you. Calculus is about the rate of change, right? So derivatives, under the derivatives umbrella, you've got options, swaps, forwards, futures, and other exotic products. And the reason why the derivative market is so much bigger than the global stock market is because a lot of firms use derivatives to protect themselves. So let's say that you're SAP, a great German software company, and a big percent of your sales are in US dollars. You might use derivative instruments to hedge the US dollar versus the euro so it doesn't impact your earnings as much. If you're Southwest, you might use futures to lock in the future price of oil so that if oil goes up a lot, you don't lose money. And interestingly enough, the CFO of Southwest, who eventually became the CEO, which rarely happens, in 2003, what he did was he realized that, oh my God, oil prices might go up a lot. So what he did was he locked in the future price of oil at $30 a barrel for like 10 years. And by 2008, summer 2008, most people don't remember this, but the price of oil went up to $150 a barrel. So Southwest cut prices then. It was predatory to force the three major U.S. airlines, the big uglies, into bankruptcy. A lot of people that own individual stocks use derivatives as well to protect themselves in case the stock falls off a cliff. Now, in my program, my website, I have over 35 hours of explanation on how to use derivative instruments as well. It's good for insurance, and sometimes if you want to profit by buying an out-of-the-money leap. And I can go into a lot more detail on that if you want me to. Yeah. But the problem with derivatives is if we overuse them. Okay, and I don't want you guys to sell options, meaning underwrite them. Because what happens is you can get randomly assigned by the CBOE, for example, and lose more money than what you invested. Use derivative instruments properly and don't use much leverage, please. Okay, next question is Xiaoming. How are you? Who's in my accelerator program? Great to see you, bud. Xiaoming is an accounting student at Purdue. Great guy. Good to see you as well. First question is, how do you evaluate whether a mentor is a good fit? And how do you keep that relationship valuable for both sides? Yeah. So I'll answer this generically for anybody that works in a big company or any company. I want you to have multiple mentors, okay, meaning multiple Yodas that are going to advise you. And I want you to get multiple mentors in different departments, just in case the department you're in is letting people go. And the way to find mentors quite often is to find people who have something in common with you. So if you work in a company, go on LinkedIn and find people that are similar to you and then send them an email internally in the company. Say somebody has something in common, like John. Hope all is well. I see that you also went to the Toronto French School, as did I, and you also graduated from Columbia University, as did I. Please let me know if you have time for a coffee. Thanks. They're going to meet you. Set up a coffee with them. Every 3 to 6 months, set up a coffee with them. And confide in them once you feel comfortable and you trust them. And ask them about how to get promoted. Or how do I get a job in a different department if you're not happy where you are, etc. And it works outside companies too. Just find people who have things in common with you and meet with them every 3 to 6 months. They will help you if you ask. Ask and you'll receive. It's prophetic. It's been true since the beginning of time. Now, the most successful people on the planet, they're all givers, right? And I've got a great book here that I'll quickly summarize for you. It's called Give and Take by Adam Grant. The most successful people and the richest people in the world too. A lot of them are douches that can be abrasive, but they're givers. They help you if you ask. So ask for help. Reach out and ask for help. They will help you. And quite often they help you because it's not selfish for them, but it serves two purposes. Because when one teaches two learn, and they remind themselves of what their DNA subfabric is for success. And I want all of you to mentor other people as well. Yeah. Okay. Next question is, if and I see, Xiaoming, you're numbering these. So you wrote number 1. I see 159. The reason why the other questions might not have made it through is because you put a hyperlink in. YouTube, for some reason, I can't control it. It doesn't allow that. Yeah. So you wrote, if ETFs like VU are your core, how do you decide when or whether to add factor funds or sector tilts? Okay. So it all depends on the portfolio construction. I prefer to own individual stocks, but I do own the VU as well. If you don't have time to do investment research on stocks, buy ETFs instead. Yeah. And then you wrote, what's your practical playbook for recessions? Rebalance rules, buy triggers, cash buffers. Yeah. So for me, I'm longer term focused. I don't play the markets for cyclical downturns or upturns. I'm very long term focused. I love to invest in what I believe are 5x5s, meaning 500% return stock within 5 years. Quite often I'm wrong, but if I'm a little bit right, I do well. Yeah. Okay. And then Zimmer wrote, hello again, Chris. Hey. I just want to ask any software that you recommend for paper trading, because most paper trading software that I came across requires to create an account with a broker. Yeah. I would go to Thinkorswim. Okay. Do a search for Thinkorswim. Download the app. Okay. And then what you can do with Thinkorswim, which was owned by TD Ameritrade, what you can do is you can log in with a real account or a paper account. And then you can trade stocks, options, everything you want. If you can't get it in the country you're in, use a VPN. Yeah. Okay. Oh, you wrote, yeah, Thinkorswim was bought by Charles Schwab, right, from TD, not available in my country. Yeah. Get a VPN. I use ExpressVPN. Okay. That's the product I use. $10 a month. I use it on all of my devices. And then set it up so that you're in the United States. Really easy to do. Yeah. Okay. Xander wrote, hey, Chris, in your opinion, are Chinese companies such as Alibaba investable based on PE or PEG? They seem cheap compared to tech companies in the U.S. At the moment. Yeah. So what I recommend doing is I recommend creating your own investment research report on any company you want to do research on. Okay. And by doing this, and this, you can use the templates in my products, you will figure out what the long-term valuation is. Okay. And in terms of understanding why it trades, if it does, at a discount, it could be with respect to the financial statements, lawsuits, government policy, etc. And you'll only know if you analyze the 10K, the annual report, which you can do using my forensic financial statement analysis using AI product here. Yeah. Okay. But a lot of it could come down to policy risk, which could create an inherent discount. Yeah. Okay, next question, Armand. Armand wrote, hey, Chris, what are your thoughts on exams like the CFA? Yeah, Certified Financial Analyst Designation, CFA. It's better than an MBA. So the CFA has 3 levels, level 1, 2, 3. And what you do is they give you a lot of textbooks to buy, which are a waste of money. You're going to buy the Schweizer books on eBay, right? Which will tell you just what you need to know. Buy them used for like 30 or 35 bucks. The CFA, there's 3 exams over 3 years. And level 1 is like all the finance stuff you learn in a finance MBA. Level 2 and 3 is a little bit more advanced. I think it's great. I think it's more prestigious and more recognized than an MBA from a top finance school. Yeah, I think it's great. Okay. All right, next up, Peter wrote, in Australia, we've had strong real estate price growth for 30 years, reinforced by government policy. So speculative flipping has been a big earner for people. Do you recommend this as a strategy? No. I don't recommend flipping unless that's your full-time job, right? If you buy, I always love buying the crappiest house in the nicest neighborhood as opposed to buying the nicest house in the crappiest neighborhood. And if you fix up that house, if you know what you're doing, you can do well, but it's got to be your full-time job. It can't be a side hustle. Yeah. I believe in long-term wealth generation by buying houses and just renting them out forever. Never sell them. And my grandfather, God bless him, who's up there with my sister Katie. Hope you guys are having fun. High fives. He used to say to me, Chrissy, buy land. They're not making it anymore. Yeah. Okay. All right. Next up, Conrad wrote, hey, Chris, life update. Sure. My wife and I spoke to a mortgage broker, and we were pre-approved for a much higher amount than expected. Housing prices have already dropped a bit. Do you predict they will drop further in 2026? Cheers from Canada. Yeah. Well, congratulations on being approved. No matter what, I only want you to put down, I want you to put down at least 20%. Okay. I don't want you to use too much more leverage than that. And I want you to talk to your accountant who's very familiar with Revenue Canada to make sure you're buying it the right way so you get enough tax breaks. Okay. In terms of housing prices, I don't really care. Like for me, the way it works is if I buy a house at kind of the peak of the cycle and it dips, well, in the long run, it's going to be worth a lot more. And think of how much money you're going to save in terms of not renting. Now, yes, houses are overvalued in Canada right now, right? Because of immigration. Immigration is a beautiful thing. I'm the product of, an immigrant. I grew up in Canada. My dad immigrated from Egypt, and my mom's side, it was Lebanon many years ago. But the problem with the Canadian government, and I'll blame the Trudeau administration, make Trudeau a drama teacher again, sorry, is they allowed in too many immigrants in a short amount of time. And as a result, demand for housing went up materially. It's not fair. Yeah. But what I would do before considering buying is exactly this, okay? I want you to take my real estate course, which is only available on my website, okay? And what I want you to do is I want you to do a business plan for the house you want to buy. Notice I said house like Canadians do because I'm Canadian. And the example I use is this house here that I own, one of many, in London, Ontario. And I want you to answer all the questions here. Okay, there's tons of questions. And then what I want you to do is print out your business plan. And I teach you everything, man. I teach you how to speak to real estate brokers, do your own due diligence, which real estate appraisers to talk to, real estate lawyers, contract paperwork, insurance, and everything. And then and only then should you consider buying. Yeah, do your research first, please. Yeah. Okay. Okay. MrBeast said he was scared. I saw that too on Twitter. MrBeast said he is scared of Sora and AI videos on YouTube and future of YouTubers. What are your thoughts? Yeah. I'm more of an optimist. That being said, it does scare me how good Sora is. And so I've got the new version of Sora here. I put myself in a Blue Jays game where I hit a home run against the Yankees, and I did a bat flip, which went up and hit the CN Tower and exploded. And it looked so real. I sent it to my family, so we had a good laugh about it. But it was scary because it was so perfect. It was me. So I don't know. I think there should be laws put in place that you're not allowed to use AI to replicate anybody else, or there will be fines. Yeah, it's just not fair. Yeah, and I promise you, I don't know anything right now, but I promise you over the next couple of weeks, you're going to see videos from politicians from certain countries that you think are real, but they're not. It's that good. So we need to pass legislation immediately. Yeah. And I know that a lot of big companies, a lot of my corporate clients, like Workday and Dell and others, and Marvell, they all have chief AI ethics officers now. Yeah. Be careful with this stuff, guys. Yeah. It is scary. Yeah. It's scary from a creative perspective. And I want you guys to all start creating YouTube content like I do. I'm not the best at it, but I'm consistently bad. I'm consistent at it. And I think you have 1 to 2 years to establish the brand of you before AI avatars are created and destroy the market. Get started now. And YouTube is the biggest gold rush in history. And it's the only gold rush in history where it costs you nothing to make the product. And it costs you nothing to get access to potentially billions of customers. And I teach this as well. And if you want to learn how to do it on all social media products, you sign up for one of my products on my website where you get all my courses. And I teach you, of course, it's down here in the bottom right-hand corner, the complete YouTube course. See it there? Bottom right-hand corner there. Yeah. Okay, let me go back to Wirecast. And let's choose this background here. Okay. Okay. All right, next question is, what is an easy way to make money locally without much capital? Yeah. So there's over 100,000 consulting firms in North America. And the reason is because there's no barriers to entry and it costs you nothing to start. So I would say consulting or advice is the best way. How do you get started? Well, on LinkedIn, have an amazing LinkedIn profile first, of course, and we help you with that in my company. And then what I want you to do is I want you to be a thought leader, and I want you to publish articles every week on whatever sector it is you want to give consulting advice on. And this will give you social proof and credibility so that eventually you can reach out to people to get clients. I'll show you how we do it, okay? And I don't spend any money on LinkedIn advertising at all, okay? I never have. So on my profile here, and I recommend you guys do this as well for those who have your own businesses. So right here, you see View My Services. You can add this for free if you're a premium member. You click here on View My Services, okay? And these are all the client projects from people all over the world, right? This is just the past couple of hours. I don't pay for this. And it's just endless requests I get for my service. We can't keep up. And on my service page, all I do is I add this. We offer this stuff. And then there's certain tags you have to use right here as well. But the reason why it works for me is because, I'm pretty consistent about creating a lot of content. And I do it on YouTube as well. So what you want to do is you want to write once, read many. And you want to repurpose your content, which Gary Vee taught me. And what that means is if you create a LinkedIn post, make that an Instagram post where you're going to read it, which is what I do. Or if you create YouTube content, which I do, then what you're going to do is you're going to repurpose that as well. So I'll show you. So for example, I made Wall Street Pro reacts to the movie Margin Call. Okay. And then I repurposed that in terms of just shorts, right? And you get millions of views and all that stuff. And there's always a CTA, meaning a call to action. So for example, when you watch one of my videos here, it says you want to break into finance. And you click here, and then you click right here to set up a call with us. So remember, there's always got to be a CTA, meaning a call to action for everything you do. And again, it costs you nothing to create this content. Yeah. And for those of you that watch my channel, I've got a vlog coming out on Monday, which is Wall Street Pro reacts to Suits Season 1, Episode 1. I had this on my desk a while ago, and somebody said, Chris, why do you have sluts on your desk? I said, no, it's Suits. Sorry. Okay. But in terms of making money, like you always want to use other people's money. It's the best way to make a killing, okay? You got to get a lawyer involved first to create an investment offering memorandum and protect you, register your company, etc. But if you think about it, why is Jeff Bezos worth a fortune? Why are venture capitalists worth a fortune? Why are private equity owners like KKR, Henry Kravis, worth a fortune? Because they raise money from others and they take a fee. It's the only way to make generational wealth is to use OPM, not the drug, other people's money. Get a lawyer to represent you though first, please. Yeah. And please never get a loan for your company or any startup because banks are chicken. And if you miss one payment, they'll take everything. Instead, I want you to get money from high net worth investors. Okay. And don't go right to venture capital firms when you first start a company because they're not going to be the first investors. Plus the sales cycle is long. You're going to set up informational meetings with high net worth investors because the sales cycle is quite short. And you'll do it using the networking methodologies I explain in my products. Go to the link in the description, set up a call with us. Next. All right, next question I've got here is, when you said 20% in safe spaces, do you mean gold, bonds, or real estate? Yeah. So that was probably with respect to a question I answered earlier where I said, if somebody's 80 years old or somebody's 20 years old, what percent of their portfolio should be in risky stuff versus not risky stuff? You take 100 minus 20, that's 80%. So 80% is in growth stuff and 20% in low risk stuff. By low risk stuff, I mean stuff that's not going to go down materially if there's a recession. Yeah. So it could be a little bit of gold. It could also be government bonds that are AAA rated, et cetera, and other fixed income instruments that you cannot lose that money because you have to survive. Yeah. Yeah. Not real estate. No. And then Peter wrote here, I've been meaning to start producing a few YouTube videos. As a beginner, it'd be interesting to see how you did as a beginner. Do you still have your earliest videos online? Oh my God, they were brutal, dude. And by the way, you can always go to my favorite vlogger. Okay, this is a guy named Marquise Brownlee. So he's great. So if we go to his videos, right, and you look at the older stuff, and this will be, let's go to videos. There's a way to sort it by oldest. Let's go sort by upload date. Yeah, and you can reverse this as well, but his older stuff was really not that good. Same thing with Gary Vaynerchuk as well. I wish I could figure out how to sort faster. But yeah, if you go to my channel, Chris Haroun, if you go to my channel here, look at that. HBS is sponsoring whenever you do a search on my name. Folks, I want you to know that HBS, 2/3 of HBS is BS. Maybe it's Haroun Business School is BS. I don't know. Anyway, you can go to my channel here, and then what you do is you go directly here to videos, and then you can sort by oldest. Here we go. Good. All right. This is an excerpt from Entire BA1 course. This is my old stuff here. I was trying to figure out my way. Here I talked about technical analysis. This is me when I was younger, a young buck. My TEDx talk. Yeah, you can always go look at my older stuff. It clearly wasn't an NBC interview I did on television where I was terrified. Yeah, anyway, you can always check out my old stuff so you can laugh at me, not with me. Yeah. All right, let me go back to, let's try this camera angle here. How fun. Okay. There are people who flip real estate. Is it a viable business long-term, and why? Only if it's your full-time job, okay? And you have to be really astute to understand where you find value. Usually, as I mentioned earlier, you want to buy the crappiest house in the nicest neighborhood instead of vice versa. But you have to know how to fix up these houses, or at least have partnership with contractors, etc. Yeah, and be careful about leverage, please. Yeah, but it's something you got to be doing full time. You really ought to understand this stuff because it's very, very competitive. And Manas, before you do it, because you're a premium customer, I want you to watch that complete real estate course of mine and create a business plan on whatever property it is you want to buy and flip. And you can also partner with others and use OPM, other people's money. Yeah. All right, Rita wrote, would BYD, which is the biggest Chinese auto producer, they make cars that are better than Tesla and cheaper. Would BYD bankrupt Tesla if it's allowed to do business in the United States? Yes. Okay. Big Abaze wrote, I saw an article about the private equity firms getting caught up in the first brand's bankruptcy. Is this contained or does it spread beyond those banks and lenders? JEF for Jefferies, Key for KeyBank, JP Morgan. Yeah. If it's larger banks, these banks are too big to fail. Okay. You got to look at the insurance as well that they have on these asset classes. The only way you're going to find out is if you read the investment offering memorandum. Yeah. All right. Leonard wrote, hey, Chris, I left my 20-year career project management firm 4 months ago, and I opened a restaurant overseas. Shall I list on my resume or leave the gap since it's unrelated to my career? Okay. So what you want to do on your LinkedIn profile, you never tell lies, obviously, right? But if, let's just say that there's somebody watching this webcast that was let go 2 months ago from their company that they've been at for 10 years. You never want to list months on your LinkedIn profile, okay? You want to list years. So it would be 2015 to 2025, okay? And that will work optics-wise because optics matter up until the end of the year, obviously, right? And of course, you have to disclose everything in the interviews as well. But people quite often don't get interviews if it looks like they don't have a job. Yeah. Okay. And if you have additional questions, please let me know. I'm happy to help you. Yeah. But what you have to do if you want to get a job, it's hard, man. Like every time you see a job opening online, you have a 1 in 250 chance of getting the job. And the person that gets hired knows somebody at the company. So what you have to do is you got to have an amazing LinkedIn profile, which we help you with. But more importantly, you have to network aggressively on LinkedIn to meet people that work at those companies that you want to work at. Yeah. Okay. All right, next up, Ryan wrote, should you go super conservative on a business plan for user acquisition for months 1 to 3, or should you put down what you really feel you'll hit? I would be conservative if you can. Now, the harsh reality is that when venture capitalists look at your financial model and your business plan, they always cut your numbers in half because they know that entrepreneurs are not being unethical. Entrepreneurs are not being unethical, but entrepreneurs are usually very, very positive people. Yeah. For you, I'd be very conservative, always. Yeah. Yeah. And before you launch a company, or let's say you guys are working at a company full time and you have a side hustle. When do you quit your full-time job to do your side hustle? Well, here's how you decide. You quit when your trailing 6 months revenue is greater than your annual salary. And I say 6 months because you have to account for seasonality. Usually the month of December is the biggest month by far every single year. It's so big that the retail sector, they have Black Friday. So in the United States, the third Friday, I think, of November every year, They have a Black Friday sale. And it's called Black Friday because a lot of retail companies are in the red. They're losing money until Black Friday. And December's a massive holiday shopping month. So don't ever take 1 month, meaning December, and extrapolate it. Take 6 months. Yeah. And write that business plan first, please. Okay. Okay. Next question is, if you were to do a PhD ever, what would it be on and why? PhD, that's plumbing, heating, or dishwashing, I think. Yeah. I would never do one. Yeah. I mean, unless I wanted to be a full-time professor in school. Yeah. If I were to do a PhD thesis, probably something along the lines of, I don't know, how AI will impact business. Yeah. Yeah. I would never do it. Okay. Next up, Ziad wrote, hello, Mr. Chris. How are you? You wrote, this should have been sent from years, but this year I took a course of mine called the 101 Crucial Lessons They Don't Teach You in Business School on Udemy. It's worth it. Thank you so much. I appreciate that. And I wrote a book on that, 101 Crucial Lessons They Don't Teach You in Business School, and very humbled to say that Forbes called it one of 6 books all entrepreneurs need to read, along with Stephen Covey's book, Simon Sinek, and Lean Startup, and a bunch of others. And when that article was published, I was so happy. I worked in venture capital at the time. On that book, I self-published. I went out, whenever I have a big milestone in my business, I go out and I buy toys for my kids. It's just what I do. And I remember I bought Dylan a lightsaber, him a basketball, and I think for him it was Super Mario Galaxy, which was really for me. Yeah. And yes, I did download the new Super Mario Galaxy on Nintendo Switch 2 the other day, and I'm playing it again because I'm a man-child. Yeah. Oh, this one's interesting. All right, Manas wrote, do you trust Tucker Carlson and his content? I mean, he's a bit extreme, but sometimes he speaks honestly, to be frank. Yeah. When he talks about religion, yes, I trust him. Yeah. Because like him, you know, I'm a Christian, and I believe we're all here for a certain reason. Yeah. Yeah. All right, but always do your own research. Yeah. 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 And then one thing I really respected about Charlie Kirk as well was his closeness to Jesus and to God. Yeah. And I pray for his family, what he went through. Regardless of whether you're Democrat or Republican, doesn't matter. He's a human being with kids. Okay. Okay. And then Manas wrote, that is wonderful about the 3 words you asked me. God loves me. It's true. He does. And then Ruth wrote, amen. Thank you, Ruth, and God bless you. Okay. Really puts things into perspective, right? All right, next up, Peter wrote, yep, the thing is never spend time worrying about the things you can't change. Put your mental effort into the things you can. Exactly. The past does not equal the future. Focus on being happy today and work hard and everything will work out. Don't worry. Yeah. Okay. And then Peter wrote, also, risk management isn't just for the office. You can do it for every big project in your life. And always have a contingency plan, a plan B. What that means is this. Every time a headhunter reaches out to you, take that meeting. Always have a plan B. Because companies overhire and they overfire. They cut into muscle. Always have that plan B. And never use LinkedIn at work. And if your company gives you one of these things, never use LinkedIn on this. Yeah. But take every headhunter meeting you get, network a lot, always have a plan B. Okay, you put your family first, and then your company second. Yeah. All right. All right, and Elif wrote, hi, Chris, again. Yes, I was in Qatar, but I'm currently in Oman. Oh, right. And getting ready to go back to Turkey. Oh, excellent. Congratulations. You made the transition. I remember you want to do that. I'm planning to start job hunting in January. And then finally return around May 2026. Thanks again. Thank you. Thank you. And congratulations. That's wonderful news. Yeah. And if anybody wants to, if anybody's interested in changing careers, starting a company, learning how to invest, etc., We do it all. I want you to go to harounmba.com, and at the very bottom, click on the button that says book a call, or go to the link in the description of this video and click on the hyperlink you see at the top there. Okay. So my business is that I give you 10 hours of one-on-one coaching. Okay. You also get access to all of my courses for life. You also get access to 300 hours of small group Zoom coaching with me. Okay. So if you're interested, again, book a call and talk to one of my staff about it. Yeah. And I don't pawn you off on somebody else. It's me with you directly. Yeah. Okay. With a 30-day money-back guarantee. All right. All right. Next up, Manas wrote, how did you short when you were in the hedge fund industry? What tools did you use and how much? Thank you. Yeah. So I ran massively net short for all of 2008, pretty much. Yeah. And the way you do it is you have to have a prime broker. My custodial service was Goldman Sachs Execution and Clearing. But what happens is you deal with a prime broker, and you can either have a trader in-house or not in-house. And I outsourced that. So what I would do is I had a messaging system where I would message Mike Ashendorf, who was my outsourced trader. Great guy. I love him to death. And he would take care of all the trades for me. Yeah. Yeah. And then whenever I shorted stock, I would always ask him, first of all, what is the cost to borrow on the ticker name? And if the cost to borrow was above, I don't know, 10%, I usually wouldn't do it. Yeah. Because you can get a short squeeze. Yeah. And then you also look at the short interest ratio as well. And if that's over 10 days, be careful and get a short squeeze. Yeah. All right. And you wrote, thank you for everything, my mentor. See you in a few minutes. God bless you all forever and again. Thank you. Awesome. I'll see you in a couple of minutes on our weekly premium call, Zoom call. Yeah. And if anybody wants to join that call that's not already a member, you can go to the link in the description of this video to buy one of our products, or if you guys, I shouldn't do this, but I'm going to. I will put this link here to become a founding member to get access. Price is going to go up materially on the 15th. Okay. The link's in the description. I'm going to remove that link, I think, in a couple of minutes. Just, yeah. Okay. Okay. All right. If you had to pick between finance, accounting, or management on the last term of business, ADM degree, what would you pick? Oh, I see. I would pick whatever you're most passionate about. In my job, okay, so the reason I do what I do, it's fun, I love it, is I think of myself as your waiter. Whoops. Oh no, I broke it. Damn it. I proposed to my wife this too. Damn it. Okay, I'll have to tape this together. I'm such an idiot. Laugh at me, folks, not with me. Motherfucker. All right. But when you go to a restaurant, now it's going to be hard for me to use this prop. When you go to a restaurant, this is where I proposed to Christine. God, our marriage is done then, I guess. I guess MBA stands for married but available now. I'm just kidding. WTF, man. Why the face? But when you go to a restaurant, what you do is you look at the entire menu. You only choose two things, okay? And my job is to expose you to every type of career, not just two, so that what you can do is you can pick the career you're most passionate about. So to answer your question, of those 3 courses you're thinking about taking the last semester of school, whatever you're most passionate about. Okay. Damn it, I broke my menu. The older I get, the better I was. And I had a senior moment there too. All right. All right, next up, Matt. Hey, Matt. I wrote, agree. I'm considering postponing my CFA Level 2 from November 25th to May 26th and working on building my research reports and publishing social media platforms to establish a presence. Thoughts? Provide me a little bit more detail on that first. If it's going to be research reports on what stocks to buy, etc., just let me know some more details. Or if you're in my premium product, I'll see you in about 10 minutes. Yeah, thanks. Okay. Will wrote, I bought your on-demand course and I've been having issues finishing it. I saw your email on the coming offer with AI. Would you suggest I buy in to help finish the course? Yeah, absolutely, because I do hold you accountable and I help you. You get a lot more access to me as well. Yeah. And for those of you having problems procrastinating, there's a really good book I want you to read. Please, this is important. Everybody get a pen. Ready? This changes everything. All right. The book is called How to Stop Procrastinating. But I never finished it. I'm just kidding. That book doesn't exist. I'm just pissed off because I tore my menu, man. You know how many times I've used this prop? Damn it. I'm going to buy another one on eBay. Okay. All right. And I can only take a couple more questions. And if I don't answer your questions, I'll see you guys on the weekly Zoom call if you're a premium member or next week on this call. Ralph, hey Ralph, wrote, hey Chris, I'm starting a multi-service business and I'd like to know how can I market it and get customers? Please, any advice? Yeah. So what I do with my business, as I showed earlier, and you can always rewind the webcast, is I publish a lot of stuff and my team helps me too on LinkedIn. And then I have a button at the top of my LinkedIn profile that says view my services. And we book an insane number of meetings doing that. And it costs me nothing. But what you got to do is whatever social media content you create for LinkedIn, you're going to repurpose it in terms of videos directly on Instagram. And then repurpose also, you can create YouTube videos and then slice and dice those into YouTube Shorts. And we also do it as well on TikTok as well, which I guess we should figure out how to monetize at some point. But yeah. Okay. All right. Can you explain the difference between a hedge fund and a company like Jane Street? Yeah. I've heard of Jane Street. Let me first of all see. Is that a mutual fund or something? I don't even know. Let's go here to Jane Street. What is it? Whoops. Fuck. All right. Okay. It's a trading firm. I guess it's just a day trading firm. Let me see. Give me a second. I don't even know. Is Jane Street a hedge fund? Yes. Be brief. That's a little bit ridiculous. All right. Jane Street. Who are we? Quantitative trading firm. Traders with 3 employees. We have proper range clauses. What terrible branding. There should be one sentence explains what they do. I think this is more of a service provider for traders. Yeah, it's more of a service provider, I think, and less of a hedge fund, I think. I think, if that makes sense. Sorry, I wish I had more time to do research on it, but I apologize for not answering the question right. Yeah. All right. All right. Ziad wrote here. Hey, Ziad. I have a job task to make. Sales forecasting model in Excel. What course of yours do you recommend to assist on this task? Yeah. And then everybody, for that link I put there, I'm going to take it down in about 5 minutes, okay? Just, this is the last, if anybody, yeah. So the course I recommend that you take is my complete, Alexa stop, is my complete Excel course. And let me see if I can go there with you. I'll show it to you here. Bookmarks. Yeah. So, yeah, the complete Excel course. It's this one here. Yeah. And I teach you every function in Excel, how to program Excel, every menu item, every icon, everything. I've been using Excel hell since the 1980s. Yes, I am that old. Excel. Over 1 billion copies have been sold as well. I started using it in the 80s. Crazy. Yeah. And you really need to understand Excel if you want to work in finance. Yeah, a lot of people say, no, we just do Google Sheets. BS. You need to use Excel. Yeah. Okay. Yeah, I would also just, if you sign up to all my products and you get access to me as well, another course I would take is just my finance and accounting masterclass here, which teaches you financial modeling as well. Yeah. And it includes all the spreadsheets I've shown throughout this entire webcast as well, and many more I'm in the process of adding. Yeah. Okay. Okay. I've got a headlight up here as well. All right. I'm going to go back here. I'm going to wrap this call up. Let me take 1 or 2 more questions. Okay. All right. I'm going to delete this link here. Give me a second. Remove link. Okay, great. All right. So if anybody is on my my founders list, email list, you can buy that community product. You got an email. You probably get another email from my team the next couple days, and then prices are going to go up materially the 15th of October. Yeah. All right. And then Peter wrote, with respect to this menu that I tore because I'm an idiot, you wrote, oh no, be careful when you repair it. Ordinary sellotape will stain and go brittle with age. You can buy better stuff that lasts longer. No, thank you. I appreciate it. Yeah. Okay. All right, guys. I'm going to end today's webcast. Again, if you're interested in joining one of my programs or setting up a call with me and my team and I, my mom will correct me. What you're going to do is this. Give me 1 second. All right, hold on a second here. Okay, good. You're going to go to harounmba.com. And then at the very bottom, you're going to click here on book a meeting and set up a meeting with us to see if it makes sense. Okay, good. All right, costs you nothing to book the meeting. And what I'm going to do is I'm going to end this webcast like I do every webcast with a very short video that I license that will change your life. It's an interview with Steve Jobs. And just remember also not to worry about stuff, guys. Things are never as bad as you think. Okay. All right. May God bless you all. I love you. For my premium students, I'll see you in a couple minutes. And for everybody else, I love you all. I'll see you next week. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.